Dhiraj, great to speak with you. Now, it seems like in the last 24 hours, the market may have shrugged off some of those concerns as far as the election outcome is concerned, as those jitters are concerned. Would that be a fair assessment?
Good morning, Tamanna. Thank you for having me. I think I would say that this is a fair assessment, but I am not unnecessarily perturbed with the volatility we are seeing during the election times. This was, in any case, on the anvil and expected. In fact, I was looking at the data of VIX data for the 2014 and 2019. Actually, VIX went up to 28.8 and 37.7 also in these election times. So we went only up to, I think this time in these elections, 2024 to about just 21.48. So yes, it was expected. And when when you are sitting on profit, some people would like to do the profit booking. Some people will do the bottom fishing. So some kind of a range bound activity was expected. I think what has changed in the last couple of days is probably, the two ministers have assuaged the concerns of the market participants also. Dr. S.S. Jaishankar was there at NSE. I attended that event also, and he could able to allude that how the incumbent government has a high probability of winning, and there'll be a stability and continuity in the policies. I think the same thing was alluded by our Honorable Finance Minister Nirmala Sitharaman at BSE event also. So I think some of these things assuage the concerns of the market participants. But overall, I think the claims and counterclaims of various political parties, experts, and so on will continue, and we will see that some volatility will be there in the market. It is the inherent nature of the market. And these are the times when you will witness more volatility.
Is an opportunity is the question, Dhiraj, because those who are maybe a little perturbed by the kind of volatility we've been seeing would be wondering if this is an opportunity to come in, stay on the sidelines, and then what exactly do you bet on?
I think India is an absolute sweet spot. Elections will come and go. I'm not undermining the importance of a mega event, once in a 5-year event. But let me tell you, when we will talk again in June post elections, it'll all be done with, and we'll have a stable government, and we'll move forward. We'll be discussing the other issues and not elections anymore. So my take is that these are good levels to enter in the market when you get some correction, some kind of a froth going away from the mid caps and small caps, and particularly in the select counters where the results have been good. This is an opportune time for us to get into the market, and we've been recommending all our investors to invest in a staggered fashion. Actually, Tamanna, there is no one size fits solution for all investors. Those who are existing investors, they are already fully invested or largely invested in the market. I think there is no need to panic. There is no need to have any knee-jerk reactions. Let the volatility come and go. And at best, what they can do is they can rebalance their portfolio. Some of their preferred stocks where they could participate and they have been feeling FOMO. Probably they can reallocate some funds there. Those who haven't invested, those who have been fence sitters in the market, I think it's a good time for them to start investing in the market, irrespective of the volatility, in a staggered fashion.
Dhiraj, hi, it's also Samina joining in. Do you think FY25 could be a volatile year for the markets, or do you think on the flip, double-digit gains are still possible? And also, any risk or chances of a black swan event in FY25, not locally, but global in nature?
So let me answer the second part of your question first. I think what are the key risks we are carrying? I think the biggest elephant in the room is not elections, but the stubborn inflation and high interest rates. And we are witnessing that time and again, the commentaries are coming from the central banker, whether it is Fed or Reserve Bank of India, that rate cuts are getting postponed and pushed forward. So that is one of the big risks that we carry in the market. And our take is that it will get pushed to the last quarter or even to the first quarter of the next calendar year also. So that is one big risk. Of course, I can't undermine the importance of geopolitical risks that we are carrying because of all geopolitical tensions that are going on. However, crude have eased little bit. So to that extent, that got assuaged. But these are the risks I see. And in domestic market, the black swan event could be like what we have witnessed in the 2004. Let me take you, 20 years back. I was looking at the data and I realized that on 17th May 2004, BSE corrected 15.5% on a single day because of the different than the expected outcome in the election. So that if we get something like that, the probability is less on our assessment at the ground level. But if we have event like that, then there'll be definitely a knee-jerk reaction in the market.
Dhiraj, just a very simple, straight-up question. What sectors are you betting on regardless of who forms the next government at the center?
I think the India growth story is hovering around the domestic economy. That's something we will continue. Whichever government will come, they will invest more on the infrastructure side, the defense momentum. You guys covered a good story today morning on defense. Will continue. Some of the recovery will happen in the BFSI side because we so far in last 7-8 years we witnessed only government-led capex, and now only off late we started to see some green shoots in the private sector capex. I think this is a long haul. India have been always a consumption story. Consumption has been a secular theme in India. Whenever we get the capex going, that's when the industrials. That's when we see the BFSI sector doing very well. So that's what we are looking at. I think FMCG has been struggling big time on the volume growth side, though on the margin side they've done better with the El Nina led monsoon, better monsoon on the anvil. I think there could be some upside in the FMCG also, but that too in the later half of the year once we get more visibility on rural demand picking up. IT is one sector that has not performed in the last 1 year or 2 years. I think that's almost bottoming out, and one can start looking at accumulating select names there as well.
Dhiraj, good morning, Neeraj here. We're talking about trying to gauge what is changing in terms of the demand environment or the commentary thereof. There seems to be some change in how people are viewing chemical companies, Spec Chem in particular, but even some of the others, Agrochem, the commentary from a couple of them was not too bad. What is it that HDFC Sec is thinking about this particular pocket? Because it's export oriented, has had a fabulous last decade, and has been in hibernation for the last couple of years. Could there be winds of change?
I think chemical sector has been doing well because of the looked at as an opportunity. So that's where European customers in Western world were looking at Indian companies. So that's where we've seen this doing well. But this is again, there are a lot of cyclicality in this space. Margins related issues are also there, and then there are concerns also. So I think it's the story has already played out. Only selective counters have some upside only. Largely, the story in the chemicals have played out.
Okay, well, and viewers, just keep in mind, I think the commentary, the comment that Dhiraj is making is important, and if you just look at what some of the other brokerages are saying, kind of on similar lines as well. At the other end is this whole conversation that has come in after what Colgate has done yesterday, which is that whether there is at the margin some bit of demand recovery in the rural end. Couple of two-wheeler companies have indicated that, Hero in particular, Colgate is indicating that, Pidilite is indicating that. Are you penciling that in, or is it too soon to make that assumption?
See, urban demand have been robust, and we've seen even the unemployment data also going down in the urban. But rural area, still we have huge unemployment also, and the demand hasn't shown enough green shoots. We are still witnessing challenges. If you listen to the HUL commentary, I had a conversation with Rohit Java as well and Ritesh, who's the CFO. So my take is that we will have to wait for the monsoon to come and see that how the demand picks up. Generally, in the election year, due to increased enhanced activity at the ground. Also, there is some pickup in the rural demand, but it's not done and dusted yet that we are seeing a significant green shoots. Also, I think the new government, when they come, what kind of policies they come up with, what kind of plans they have, because any government whoever will come will have to be more inclusive to make India growth story progress from here onwards. See, 6.5%, 7% GDP growth is given. If we need another 50 basis point, another 100 basis point growth to add to that, I think the thrust has to be more on how do we take the rural ecosystem along, and that's where I think there'll be significant measures. Already we have done a great work in terms of connectivity. It's at the last mile, but a lot more work to be done in terms of creating the demand at the rural markets.
Dhiraj, just wanted to get your take on the auto pack. Now, Tata Motors and the response to its result was a little interesting because the numbers on the face of it were good, but the sustainability of those kind of numbers, the CV business, etc., what's happening in passenger vehicles was a question. What is your outlook on the entire auto space and two-wheelers, four-wheelers?
I think we are seeing premiumization in the four-wheeler side clearly. So that's where we are seeing good demand, and I think some of the intermediaries are also doing well who are into probably distribution and not just manufacturing alone. But our numbers are looking good. India is one country where people have huge aspirations. We have seen shift from a sedan to the SUVs, and demand is quite robust. In fact, one of the green shoots, we have seen that the two-wheeler demand has picked up in the rural markets. So that is some indication is there that some pickup has happened in the rural market also. So I think the EV will take some more time to fructify, but in the passenger vehicle space, but in the four-wheeler space. But overall, I think the things are good. More and more new models are also getting launched in the range of 7 lakh to 15 lakh kind of range. That's where we are seeing a significant demand also.
All right. Dhiraj, thank you so much for joining us today, giving us that election trade at a very interesting time. Dhiraj, really there.
Manna, if you allow me, I'll tell you a couple of points, couple of data points on
Sure.
SIP side. I think these are some interesting facts. And last year, April 23, the SIP throughput was just about 13,700 crore. In 1 year's time, we have added 7,000 crore. That's amazing growth, 60, almost two-thirds of a growth in terms of a per month SIPs. That's how we could able to actually counter the significant outflows by foreign portfolio investors. So I think
Absolutely.
this is something a very, very good story. My personal take is that from 20,000 to 50,000 journey will be a faster journey, and at present ticket size is only just about 2,341. Just by doubling the ticket size itself, we can go to the 40,000 kind of a crore inflows coming in from the SIPs. And just to share with you last data point, I think the current outstanding AUM in the SIP itself is 11 lakh 20,000 odd crore.
Wow. What is Nifty ending the year at as per you, Dhiraj?
I think I see post-elections, other than the knee-jerk reaction, good 10 to 15% upside in the Nifty.
Okay, so
Yeah.
it's the faith of the domestic investor is a different level of a paradigm shift. Well put, Dhiraj there of HDFC Securities.